Hello, everybody, and welcome to today's Charitable Gift Annuities webinar. My name is Denise Chan Gans, and I am the Executive Director in the Office of Gift Planning at the University of Chicago. We are so pleased you've come today, and we are thrilled to know that you Chicago alumni and friends are looking to the Office of Gift Planning as a resource for their philanthropic planning. I'll be joined today by two Chicago alumni and donors, Dan Rosenblum and Gordon Burkhart, and I look forward to introducing them to all of you later in the program. First, I just want to review our agenda for today. I will start with a description of what a charitable gift annuity is and how it works for about the first 10 minutes. And then I'll move into some of the tax and financial benefits and new opportunities in this calendar year, 2023. Then we will move on into a conversation with Dan and Gordon. I'll invite them onto the Zoom screen to join me, and we will hopefully have a robust conversation and discussion for about 20 minutes. And we'll leave 20 minutes at the end for audience questions and answers. Before I jump into this definition of a gift annuity, I just want to remind everyone that this program shouldn't be relied on as legal or tax advice. As you obviously know, the Office of Gift Planning is a part of the University of Chicago, and we're not qualified to give professional advice to others, but we do hope that you learn something, and we hope it'll be useful to you. But please always consult your own lawyers and accountants for advice specific to you and your situation. So to start, what is a charitable gift annuity? It's a contract between a donor and the university. In exchange for the donor's contribution, which is usually of cash or publicly traded securities, the university agrees to pay an annuity, a fixed dollar amount that won't change over time. And the university is going to pay this fixed amount to the donor for the rest of the donor's lifetime. The donor may include a spouse as a joint and survivor annuitant, which means that the full amount of the annuity will continue to be paid to the surviving spouse for their remaining lifetime. And a donor can also create a gift annuity for someone else, such as a friend or a relative. The annuity contract terminates at the passing of the last surviving annuitant, and it's at that point that there will be a residuum left in the contract. The residuum is what remains of the original contribution that the donor has made, which has been invested by the university over the life of the annuity, and that invested amount supports the annuity payments, has grown, and it's the residuum, it's that excess of that investment amount beyond what was used to make the payments that comprises the donor's charitable gift to the university. And it can be designated by the donor to support a specific purpose or program at the university, and it can even be used if a sufficient amount is there to set up an endowment fund. So the annuity amount is calculated by multiplying the contribution amount by the annuity rate. The annuity rate is a table that's published by the American Council on Gift Annuities. And most universities and charities offering gift annuities follow the ACGA rate table. Unlike commercial annuities, the idea here is not for charities to be competing with one another based on the rate, but to create a level playing field for this type of charitable giving vehicle. It's the age of the annuitant at the time of funding that corresponds to the payout percentage on the table. So to give you an example, a donor who is age 72, who is wishing to set up a charitable gift annuity for themselves, currently is qualifying for a ACGA rate of 6.2%. That multiplied by a contribution amount of $100,000 will mean that the annuity payable to the donor for the rest of his or her lifetime is $6,200. Next slide, please. So what are the tax benefits and financial benefits of a gift annuity? The first tax benefit that a donor is going to be eligible for is the charitable deduction. And that's a deduction up front that is available in the year that the donor funds the annuity. It is an amount that is calculated by the IRS. We have the software to run this deduction calculation, and it represents the present value of that residual amount that will be left when the contract ends. The deduction usually works out to be about 50% of the donor's contribution. Sometimes it's less, but it's generally about half of what is contributed to the annuity that a donor is able to take as a charitable deduction in the year of the establishment. Some of the other tax benefits of a gift annuity are in the way that the payments are taxed. So it's important to remember that annuity payments are taxable to the annuitant. Annuitants receive a Form 1099 every year that tells them how to report the payments on their returns. But unlike other types of income streams and investment income, such as interest and dividends, which are often fully taxed as ordinary income, only a portion of a charitable gift annuity payment is taxed as ordinary income, and a portion of the payment is even tax-free. Furthermore, if you fund an annuity with appreciated securities, the capital gains tax that's built in those appreciated securities is not going to be taxed when it's transferred to fund the annuity. Rather, it's going to be partially reduced by a portion that's attributed to the ultimate charitable gift, and that remaining capital gains is going to be spread out over the life of the annuity payments. So that is a real capital gains tax advantage to donors who are funding with appreciated securities. Next slide, please. So this is a sample gift annuity illustration. It's the type of illustration that we typically provide to donors who are interested in funding a charitable gift annuity. This illustration shows a $100,000 gift annuity, the same example as I gave previously for a donor who is age 72. And it compares the financial and tax treatment, whether the donor funds in cash or appreciated securities. So you can see that the charitable deduction and the annuity amount doesn't change regardless of whether the annuity is funded with cash or securities. However, the taxation of the payments does include that capital gain portion if funded with securities. In that capital gain income line, you can see that the capital gains that's going to be taxed to the annuitant over the life of the annuity is about $30,000, and that compares to the $50,000 of built-in gain of the funding asset, because at the top of the illustration you can see that the principal donated was $100,000 and the cost basis of the asset is $50,000. So right off the bat, a donor in this instance is going to avoid capital gains of about $20,000, and the remaining $30,000 is going to be deferred and spread out over the payments that are going back to the donor for the rest of the donor's lifetime. And this is a real advantage as compared to a donor who would otherwise perhaps take those appreciated securities, sell them, be subject to all the capital gains tax up front, in order to reinvest the proceeds in some other type of income producing investment. Next slide, please. So this slide shows you what the projected gift to the university is for that $100,000 gift annuity funded by a 72-year-old donor. It assumes certain investment returns, a rate of return of 7%, but assuming that the total distribution to the university, that residuum, is going to be $127,000, and that's after total payments to the annuitant of over $110,000. So you can see that the total combined benefit of this gift annuity, both in its payments back to the donor and that ultimate gift to the university, is double what the donor originally contributed. Here are a few of planning tips, if you can go to the next slide, that can really further amplify the benefits of a charitable gift annuity to you. So if you fund a gift annuity and you defer the payments until later, you will receive a higher gift annuity rate. So in the example that I gave previously, a 72-year-old who's entitled to a 6.2% rate if starting the payments immediately, if that donor is willing to wait 3 years until they reach age 75 to start receiving those payments, will be entitled to a 7.4% rate. So instead of receiving $6,200 starting today, they wait till they reach age 75. When they turn 75, they would begin receiving payments of $7,400 a year. Another idea which relates to the capital gains tax savings is that if you have stock that you've held for a long time that has appreciated substantially, and maybe it's now overweighted in your portfolio, and your financial advisor or you are really being encouraged to rebalance in favor of more income in the portfolio, you could convert a portion of that stock into a gift annuity and accomplish the rebalancing, secure retirement income, earn that charitable deduction upfront, and minimize the capital gains tax on that asset all in one move by funding a gift annuity. Another tip that I have that many donors take advantage of is doing repeat gift annuities year after year. So we have many donors who do this, and each time they fund a new gift annuity, they earn a new deduction that year. They will qualify for higher rates because they are now 1 year older, and they're going to be incrementally increasing their annuity payment each year, which the way we handle it is just to combine the payments from multiple annuities into one payment. The next slide, please. So this year provides some new opportunities and advantages for gift annuities, and I'm going to highlight 2 of them here. The first is that you can now use an IRA qualified charitable distribution to fund a gift annuity. This was included as part of the Secure Act 2.0, which passed at the beginning of 2023, and it included this long-awaited provision allowing the use of a QCD to fund a gift annuity. I hope that you're already familiar, or you may already be familiar, with the fact that since 2006, IRA owners who are age 70 and a half or older can make a direct distribution from a traditional IRA directly to charity as an outright gift. And they thereby avoid all income tax on that IRA distribution. The added bonus of doing that is it can also be used to satisfy required minimum distributions. which now kick in at age 73. So as of this year, these qualified charitable distributions can not only be used to make those outright gifts to charity, it can also be used to fund a gift annuity of up to $50,000. So this is an easy and tax advantageous win for donors who at age 73 have to start taking those required minimum distributions. They will avoid the tax on the RMD, and they can use the RMD to invest in a gift annuity that will benefit themselves and benefit University of Chicago in the future. The other thing that's worth noting this year is that annuity rates, like many rates in the financial markets, are the highest that they've been in a decade. So if you flip to the next slide, you can see that these are the ACGA rates for a single life annuity. And you can see, although it's a bit small, that as young as age 61, you're entitled to a rate of 5%. And it keeps on going up all the way to age 90, where a 90-year-old is entitled to 9.7% on a gift annuity. Remember that once an annuity is established, the payout amount is fixed, and it's worth mentioning that because a gift annuity is a contract between the donor and the university, it's not a trust, for example. The payments from the annuity are an obligation of the university. They are not just backed by the annuity pool, but really backed by the university's, all of the university's assets. So it is a very stable, guaranteed, and reliable source of fixed income. So establishing an annuity today, given the high payout rates, will lock in that amount for the rest of your life. Next slide, please. So a couple of things to remember. For purposes of a gift annuity with the University of Chicago, we do have a minimum, and that minimum is $10,000. We also have a minimum age requirement, and that is the minimum age at which an annuitant can begin receiving payments, and that's 55 years old. There are several parameters and requirements around this new opportunity to fund a gift annuity with a QCD. I mentioned that the limit is $50,000, and in fact, that $50,000 amount, if you want to take advantage of the full amount, has to be used within 1 calendar year. So you couldn't, for example, do a $25,000 QCD CGA in 2023 and then do another $25,000 in 2024. You would have to take advantage of it all in 1 year. I also mentioned that in order to do a QCD CGA, you have to be 70 and a half or older. And there are other requirements involved that if you're interested in doing something like this, we would certainly go through with you. So I am delighted to now transition over to my conversation with our UChicago alumni and generous donors, Dan Rosenblum and Gordon Burkhart. So I welcome them both to the Zoom screen with me. And I would like to start by introducing Dan. After completing college and medical school at UChicago, Dan spent 9 years in further training at Harvard, Beth Israel Hospital, and NIH Cancer Institute, and Washington University, with an emphasis on research and teaching of hematology and oncology. Dan then entered private practice in the DC area and participated as a leader at regional hospitals and in the American Society of Hematology. In 2002, he served as a medical officer at the FDA and the NIH for 13 years, and he has spent his retirement years consulting, writing, and traveling. Dan just returned from a trip hiking in the Canadian Rockies. Gordon is Alumni Distinguished Service Professor Emeritus in the Departments of Psychology and Ecology and Evolutionary Biology at the University of Tennessee. He received both his Bachelor of Science and PhD in biopsychology from the University of Chicago, and his research focus has been on comparative studies of behavioral development in species as diverse as turtles, bears, lizards, dogs, stingrays, spiders, crocodilians, and especially snakes, as well as animal play, animal welfare, and conceptual and historical issues. He began his career teaching at U of C after receiving his PhD, and then took a gamble by moving to the University of Texas in Knoxville, where he taught for 54.5 years before retiring in 2022. His research has been supported by NSF and NIH grants, among others, and he was a Guggenheim Fellow at Rockefeller University. He is a past president of both the Animal Behavior Society and the Society for Behavioral Neuroscience and Comparative Psychology. He has written or edited 9 books to date and has edited and serves on the board of several scientific journals. In retirement, he has taken on the role of founding field chief editor of the New Frontiers and Ethology Journal. So, given these impressive academic and professional accomplishments, I'm very grateful that the two of you are here to talk about gift annuities. So, welcome and thank you so very much. So, I will start with you, Dan. Why don't you share with us and our audience what led you to establish a gift annuity with the University of Chicago, maybe how you first learned about them. You have 2 gift annuities, actually 3 contracts with us, and I'd love for you to share what motivated you to do one in the first place.
Well, as I mentioned to you, I was active in both the undergraduate, the college, alumni association activities. I've been to several reunions, and also my medical school class of 66 actually was the chair of the 50th reunion. And you think about giving gifts to the university. I'm not super wealthy, and so I really depend on my retirement fund for our income. And both of my wife and I are in good health and hope to live another decade or 2, maybe even more. We hiked in the Rockies, we're 83, so you can tell that we don't want to lose the source of our income. So we have invested in some annuities. I had TIA and CREF when I was in academics. I had a nice retirement fund in private practice and also with the federal government. I purchased annuities partially to fund it, and others are in private investments. But the charitable annuity was really attractive because I could give the money but not lose the income from it. And so I was continuing the same income, but just getting it from a different source. And at the time, it was a charitable deduction because I was itemizing my deductions. Recently, the standard deduction has been much larger, and I haven't done that anymore, but that was my original motivation.
Yeah, we talked about that earlier, about the charitable deduction maybe being less of a motivation now because the standard deduction has gone up. And I had been speaking earlier about this opportunity to do a charitable gift annuity with a qualified charitable distribution from an IRA. Now that tax benefit, the avoidance of income tax on the KCD is something that a donor would benefit from regardless of whether they itemize or not, because that is just a complete avoidance of the income taxation on the IRA distribution. So that would certainly be of interest to people who are taking the standard deduction and not itemizing. We certainly have donors who are funding gift annuities at larger levels, and they do itemize, and I would say that the deduction is still very useful to them, given that it's about 50% of the contribution amount. So
Could talk about that a little more. The whole idea of using your IRA income, your required minimum distribution, and paying tax on it was that the taxes would be lower when you were in retirement because your income would be less. I put away as much as I possibly could, catch up all that, and my income in retirement is as big as the income when I was working. So I didn't get a rate. So for me, that means that that benefit, of a lower tax rate doesn't help me.
yeah.
So it is helpful to be able to transfer money from the RMD, so I don't have to pay so much income tax on it. The University of Chicago gets more money, and I don't really lose that much from it because I'm still getting the income.
Yeah, yeah. I know that RMD, it's required now at age 73. You have to go and compute your RMD for each calendar year based on the balance in your account, and there's really no way to avoid it. So if you don't need all of that income and you are making charitable gifts, it really is a wonderful way to zero out the income tax liability on that required distribution. Gordon, you were explaining to us, or to me earlier, you have a gift annuity with us already. You're thinking about funding another one, and you're actually thinking about using QCD to do so. And maybe you can share with our audience what prompted you this year.
Well, I've always feel very devoted to the University of Chicago for the education and career opportunities that I had. And so I've been trying to support them over the sports university over the years. And I did have, as you mentioned, currently a contract. But recently, after I retired, I established at the University of Tennessee a library in animal behavior of over 2,000 books that I have amassed over the years. And that led to a substantial deduction for the value of those books, which is more than actually what you can, given my income, the limits that are there. I think 30% is all that you can give as a charitable contribution per year. And so I have a charitable trust, and being able to use the money from the charitable trust to take advantage of the higher interest rates and make a donation, another donation to the University of Chicago was really it's an attractive choice. And that is my motivation for moving ahead again, and hopefully with that maximum amount of 50,000.
Wonderful. I think when you say charitable trust, I think you are referring to your IRA. Is that right?
No, I have a Fidelity Charitable Trust.
Oh, I see. Okay.
Yeah.
Okay.
But I can also use an RMD, but I probably use this charitable trust.
Okay. Well, this is a real-time conversation, so I should point out that when donors have donor advised funds, I think that's what you maybe have, a Fidelity Charitable Trust. You cannot use those to fund a gift annuity. You may use your IRA, but donor advised funds actually cannot be the source of a charitable gift annuity. We can delve into the details separately.
Well, my understanding from talking to you earlier is that I can't take the tax deduction for that because it's already taken the deduction, but that it would still be able to be used.
Right. You can certainly make an outright gift from a donor advised fund, but they are not actually allowing donor advised fund grants to go into these life income vehicles.
Hmm.
The IRA assets, which in your IRA account haven't been given yet, right? Not yet withdrawn, are the allowable source of these gift annuities now. But I think, you know, your description of how this other really generous gift that you're making to the University of Tennessee in the form of your books, and how it is something that you can't use all in 1 year, is driving you to do this now, is an interesting example of how you know, we always think of a gift annuity and unto itself, what are the tax benefits and advantages, but donors often have things happening in their income tax situations from year to year, which could make a charitable gift annuity attractive. So if you separately are converting an IRA, for example, into a Roth and recognizing a lot of income in 1 year, or you have a piece of real estate that was sold, or you have a business that was sold, you know, you're going to be looking in that year for the source of deductions. You most likely would be itemizing in that year. And this would be one way to generate a charitable deduction that you could use to offset elevated income in 1 year. And set yourself up for a nice stream of retirement income into the future. So,
Okay.
I guess what went into your thinking in each case for how you were going to fund the annuity, and making a choice about either receiving immediate payments or deferred payments?
Well, I took a deferred payment. I waited a year or so before I started taking the amount, because it did increase the interest payout rate.
Mm-hmm.
I waited basically till I was going to retire.
Right. Yeah. So it's really at the donor's option to decide how many years they want to defer. You have to defer for at least 1 year, but depending on when you think you might want the income to start, you could choose 3, 5, 10 years. We do have some individuals who set them up rather young and willing to wait 10 years to start receiving the payment, and that's going to have a dramatic effect on the payout rate. We can even set up a window for people. It's called a flexible gift annuity, where if you really can't decide now what year you want the payments to begin, we can write into the agreement, you know, a 5-year window, and we'll remind you when the time begins, and you can elect then when you want them to start. So Dan, do you remember at the time what you were thinking in terms of choosing whether to defer or not, and how to fund?
Yes. I deferred, I think, until I was 80. I think I purchased the second annuity when I was still in my 70s. Now the rate is 8.3% because I'm 83. That's pretty darn good.
And just in terms of mechanics, I should mention that, you know, we've been talking about the sum annuity amount, the amount annually that's paid to an annuitant. We typically set the gift annuities up so that the payments are made quarterly, and donors can set them up so that they receive the payments by direct deposit. So that makes it very convenient. And I think I mentioned earlier, if you have multiple gift annuities, which many donors do, we'll combine the payments from the different gift annuities, and you'll just get that one single check or one single direct deposit. Now, Dan, you designated your gift annuities for the college and for the Pritzker School of Medicine. I do believe that some of those were part of, your reunion celebration, so they counted towards the class goal, so that's wonderful. And Gordon, I saw that you designated your gift annuity to benefit the college. So maybe you can share a little bit with us what led you to choose these designations, and maybe what was most important to you about your time at those getting those degrees at the University of Chicago.
Well, for me, the college was, I think, a really essential and important opening of my mind, and the education that I got, I think, was really great. And I think I really wanted to support that. Although, of course, I also was very appreciative of my graduate training in the departments of psychology and and the biology program.
Mm-hmm. And Dan, and you have these gifting to support the college and the medical school. You spent also a long time here. Reflections on your designations to support those units?
Well, it's partly gratitude. It was a terrific experience. Sometimes a little painful being told how little I knew, but a big help to me because I tended to think I was smarter than I was. Now I see the University of Chicago as one of the leading options for how to do a whole bunch of things that we really need to do to combat the problems we're facing, whether it's climate change. They're a leader in biological investigations using new techniques, artificial intelligence, and all kinds of new strategies at the nano level for improving life by their investigations in biological science. And never more was it important to opinion sampling and trying to figure out how to get our nation to negotiate better, people to negotiate better with each other instead of arguing. So it isn't just that it's charitable, it's my gift to my grandchildren to try to keep the University of Chicago in a leadership position.
Mm-hmm.
I know it has a lot of money. I know there are a lot of rich benefactors who have given 10 or 100 or maybe 1,000 times more than I'll ever give, but my part matters to me.
Mm-hmm. Mm-hmm. We had a conversation too about your desire and your feeling that giving during life is meaningful to you and impact, and in your mind, an impactful way to give. Do you want to share a little bit more about that thinking?
Yeah, I've talked to a lot of people about giving charitable donations in your will, and it doesn't fascinate me. First of all, I hope they have to wait a very long time. And whatever I designate right now may or may not be what I would designate 10 or 20 years from now. So I can see a benefit right away of giving the money away. And yet, for those who obviously a lot of people have tuned in, they don't want to lose the income from it. That's a little threatening. And this way I can have it both ways. I can watch it work, and I can also continue to earn my income. And I cheerfully give the rest to the university because I have designated enough for my heirs in other ways that it isn't going to affect them very much.
Mm-hmm. Thank you. Any thoughts, Gordon, that you have about how your charitable gift annuity sort of relates to your overall philanthropic planning and estate plans and those kinds of things?
Well, I'm it's still thinking and planning on how to contribute to various charitable organizations. But Chicago, of course, is one of my main ones. But I have other professional associations and conservation and animal protection organizations that I'm also very areas I'm very concerned about, as well as trying to protect our democracy and deal with the social problems that we're faced with: economic, social, environmental.
Yeah, I can say that in my work for the Office of Gift Planning, we have a lot of donors who have gift annuities, may also leave bequests, so they're not mutually exclusive, give through their IRAs to make QCDs. So it is just a menu of options that people can choose from. I might also add that, setting up a life income gift, while in most cases, and rightly so, the intention is to, preserve a stream of income for your own support and maintenance. We have had some donors set up gift annuities with the intention of using the payment to make their annual gifts to local charities, support humane societies, that kind of thing. So there's many ways to sort of blend and knit together your philanthropic priorities using planned gifts. So we now have some time in the remaining time that we have together to take some questions from the audience. So we received some questions when individuals registered, and I can see that there's a few here in the chat. So one of the questions that we received is, what is the form of the receipt for the special gift annuity allowed for 2023, which is funded from an IRA? I think that's a question about just a charitable receipt. And it is important to note that while you do not have to pay income tax on the qualified charitable distribution that is used to fund a gift annuity, you likewise will not receive a charitable deduction upfront. So we acknowledge the funding of a gift annuity with the QCD, but we are not generating any type of a charitable receipt like we would when somebody is funding a gift annuity with cash or marketable securities. There's another question here also about QCD CGAs. If you make a QCD gift, how is the amount recognized by the University of Chicago? The full amount of the gift or something less? So for donor recognition purposes, when you fund a gift annuity or a charitable remainder trust, you are going to receive recognition for the full amount, that funding amount. The deduction is going to be less, about 50%, but your recognition as a donor will be for the full amount. And that's true whether it's funded with a qualified charitable distribution or from some other source. Let's see. There's a question here about when does the rate change and how often a year is a rate change announced in advance. So as I mentioned, the annuity rates that we follow are published by the American Council on Gift Annuities. They formally meet annually. They sometimes hold interim meetings mid-year. The gift annuity rate went up twice in 2022, and that was quite unusual. It was in response to the interest rate environment at large. So we get some advance notice, maybe about a month or two before they change. So I think that hopefully gives you an idea of how often they change it. There have been periods of time where the rate has not changed for several years. It's hard for us to really predict when they will go, up or down and how much. But they do change from time to time. It is a decision made by the rate committee of the American Council on Gift Annuities. when they meet, and they're looking at sort of many economic factors in deciding what rate table to use. And they too are aiming those rates to leave a gift to charity of about 50% of the contribution amount. So, I had a question from a registrant about if a donor already has a charitable remainder trust, does a gift annuity or does this option, I think they're referring to the QCD option, require a new charitable remainder trust? And it does. If you have gift annuities already, if you have a charitable remainder trust already, and you want to use a qualified charitable distribution now to take advantage of the new opportunity, you will have to set up a new trust, a new annuity to do so. It's not that inconvenient. It's something we can do. I should mention that our trust minimum is $100,000. So that is above that $50,000 limit to the QCDs. So we would talk about creative ways to meet that $100,000 minimum by perhaps having two people do two separate CRUTs, various types of things that would hopefully accomplish your goals. One of the questions was, can the funds used for the annuity count as part of the minimum distribution? And that was a definite yes. So if you make a qualified charitable distribution as an outright gift or use it to fund a gift annuity, it can satisfy your required minimum distribution. Let's see. We had one question, and I'll read it aloud. It is in 2023, donor transfers $50,000 from his or her IRA to charity in return for a gift annuity. Based on ACGA rate in section 7520 rate, the charitable portion is approximately $25,000. Is the donor's qualified charitable distribution $50,000 or $25,000? The QCD is going to be the face amount that goes into the gift annuity. And that's the amount that can satisfy your RMD. But this question about the ACGA rate and the 7520 rate and the charitable portion being $25,000 really relates back to how we calculate a charitable deduction. And when you fund a gift annuity with a QCD, you are not getting the income tax deduction. What you are getting is the avoidance of all the income tax on that IRA distribution. So I hope that answers that question. Is there any other questions from the audience for me or Gordon or Dan that we can help answer? If my colleagues see any questions that I've missed, feel free to chime in and remind me what those are. I definitely want to make sure that everybody's questions are answered about gift annuities or other vehicles since we're here. And Gordon and Dan, if you have any questions for us, please feel free to ask them. Well, I think because we have a little bit of time left, and maybe everyone is tired of talking about taxes and gift annuities. Oh, I see one here. One just popped into the chat before I use up the rest of the time. It was about the minimums for our vehicles, a $10,000 minimum for a gift annuity and a $100,000 minimum for a trust, and clarifying the difference between the two. I can explain that gift annuities, for the most part, are simpler transactions. The agreement is most of the time no more than 2 pages. It is, as I described earlier, a contract between a donor and the university. We promise to pay you a fixed amount every year for the rest of your lives. A charitable remainder trust is more flexible. Typically, it's set up so that it pays a percentage of the value of the trust revalued annually. That payout percentage is something that we discuss with the donor and take into consideration things like the amount of the deduction that they would like to see, the amount of the remainder gift that they want to leave, the amount of income that they'd like to receive. We have conversations about how the trust will be invested. Charitable remainder trusts can more easily take things like real estate. There is a trust agreement that we always encourage donors to have their attorneys review. So they can be, I guess, more complex instruments and transactions to consider. And so I guess I can offer that as an explanation for why the minimum is higher for those types of vehicles. They can be very powerful, very tax advantageous. They have similar capital gains tax advantages to gift annuities, and they do offer an upfront charitable deduction like a gift annuity does. And those minimums are, I have to say, are not dictated by the IRS. They are our own programmatic and administrative and sort of gift acceptance minimums that we have for our program. So in the last 5 minutes, I just want to invite Gordon and Dan and everyone in the audience to maybe put into the chat sort of where your favorite place was on the University of Chicago campus. If you can think back to a special place, a place you either spent a lot of time or really loved. Oh, Gordon puts in Duck Pond, Botany Pond, right?
Yeah.
Have you been back to see it in recent years?
Not since my 50th, which was, I guess, the 13.
Okay. Yeah, it's the ducks are alive and well, and at some point I think they had a live cam on Botany Pond. They were doing
babies.
they were doing some actual restoration, rehabilitation of that area this summer. But it's still a really, really special place on the quads. So
I was a student. I really like Cobb Hall because of its historic significance. But when you go back, I think the most fantastic experience is going to the libraries, both the Krihauer and the new, I forget the name of it, but the new library, it begins with an M. The way the stacks work and everything else, it's super accessible. Mansueto, thank you.
yes.
It's a fantastic thing to look at it.
Yeah, Mansueto in the evening, when it's all illuminated, the reading room is quite a sight. And contrast next to the Regenstein, for sure. So I want to thank both of you for being with us today and sharing your experiences with your gift annuities that you so generously have established to benefit the University of Chicago. And I would invite everyone in the audience to visit our website, which is giftplanning.uchicago.edu, to learn more. I actually had a little present that I wanted to give to people who are still with us. I'm going to put it in the chat if I can get to it here. If you're curious to know what your gift annuity rate is, we actually have a gift planning calculator. And I put the link for it in the chat. You can go to the website, type in your birth date, your spouse's birth date, and see what your gift annuity rate is right now. Again, we really thank you for joining us today, and we're grateful that you're looking to the Office of Youth Planning as a resource and to help you with your philanthropic priorities and decision making. Thank you so much, Gordon and Dan. It was a pleasure to be with you and everyone else. Have a good afternoon. Bye-bye.